I want to go through and look at the stocks we have on and talk about what my plan is for today, because we're up bigly on these trades, bigly, hugely. Some of you may have never experienced what this is like before. This is what trading is supposed to be. Whenever you put on trades and they effortlessly work for you, you're doing it correctly. I'm telling you right now, that is how trading is supposed to be done. You put on trades, you look at it, you're like, oh, sweet, it's full of winners. I'm going to let these winners run until I get my exit signal, and then I'm going to get out. I'm not going to stress. I'm not going to let any noise come through, but we are going to go through and we're going to take a look at each one of these, come up with the plan so you know what I'm going to be doing, and you can decide if that fits your plan or not. But here's the deal. I had this plan set before I made the trades. Before I made any of these trades, I had my plan set up where I was going to get in and where I was going to get out. If you can say that you did the same, that separates you from 90% of people out there. 90% of traders lose 90% of their accounts the first 90 days of trading. And I don't want that to happen to you. And it's not going to happen if you join us over at Outlier University.
Are you ready? Let's go!
Respect is earned. Respect is never given.
That's right. Tomorrow is the first class of Outlier University, and I am so stoked about this. I'm going to be teaching you every single thing, everything that I know about trading in a 9-week program, which might coincidentally be part of my master plan of creating the OVTLYR Nine. I'm just saying it might have been on purpose that I did this. So I am so stoked, so stoked. I'm going to teach you everything from you've never even traded stocks before, you've never opened a single trade in your entire life, to this is how Chris does it. I'm so stoked about this. You guys are going to change your lives. I'm telling you, what we're doing on YouTube is going to change lives. So that starts tomorrow afternoon in the afternoon live streams on Tuesdays and Thursdays. And it's going to be live with 9 gentlemen joining me here on YouTube, which I'm super stoked about. Several of these gentlemen are here, like Aussie Ian. He's so nervous. Don't be nervous. Be excited. And the best part about this, 100% free. Kresh asked, is it free? Bro, it's so free. There is no paywall whatsoever. I'm not going to ask you for your email. I'm not going to ask you for anything. It's going to be on YouTube for free. How's that sound? How's that sound? But to teach you everything I know for free, for the low cost of free. My only request is that you tell other people about this. My only request is that you tell somebody else about Outlier U. You tell somebody else about what we're doing, right? That is what we're going to do, Launchpad, for free. That's right, for free. So real quick, let me introduce myself, and then we are going to go through all these trades that we have on right now, talk about the plan for today. My name is Christopher Ewell. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. And if so, by proxy, you're going to be mentored by 5 of the market wizards, the best traders of all time, starting tomorrow in the Outlier University. So I'm so stoked about this. I've been successfully trading since 2009, but I've blown up my account twice in that time, right? I have figured out what not to do. I'll tell you one thing, do not sell options. Both times I blew up my account, both times we're selling options. And I don't do that anymore. That's because this is where outliers like us save time, make money, and start winning with less risk together as a team. So be sure you go subscribe if you haven't done so already. Now, somebody in our Discord this weekend, in fact, I want to give credit because it was beautiful. This was Tracy, I believe her name was. Tracy. She created the absolute most beautiful representation of the OVTLYR Nine. So I'm stealing it. Thank you very much, Tracy. I am pilfering that right from you. You are the best. I will give you full credit. And the OVTLYR Nine is what I look at every time I look at a stock to identify the momentum, to identify the trend, to make sure that it's moving in the direction that I want it to go. Now, does that mean it will always win? Absolutely not. But it does tell you it's moving in the direction you want it to go. Now, we used an example last week on AMD. AMD has been going down for ages at this point, and there have been so many YouTubers screaming about how AMD is the greatest buy of all time as it's going down and down and down and down. And I got to thinking to myself, Do they know something I don't know? And you probably feel that way too. But the problem here is that they had no idea what they're talking about. AMD from January 6th, when I first started making YouTube videos that people actually wanted to watch. Thank you for Felix and other channels teaching me how to make clickbait titles and thumbnails, which I was too prideful to do. But now look at this. We have 400 people watching us live right now. Probably 4 or 5, 10,000 people will see the replay of this. It's amazing. If only I knew the powers of titles and thumbnails. But the point is that even with those titles and thumbnails telling you how great AMD is a buy, all the way back on January 6th, which was the date that I started making these, right? It's down 20% since then. AMD is down 20% since then. And last week we went through and I showed how specifically on AMD on January 6th would have been a terrible buy following the Outlier 9. But now that we have the Outlier 9 lined up, let's go through it. What does this even mean? So I'm gonna change this slightly. Let me crop this down so I can make it bigger for you to be able to read it. That's my objective here. Be able to help you out. All right, I don't have to do this. I choose to do this because I get to hang with you. I love to do this. This is my jam. So 40% of any move in a stock is due to the market. 40% of every move in the stock that you want to trade is due to the market. Meaning, if the market's trending upward, that's what you're looking for. If the market's trending downward and you're buying it, you're setting yourself up for failure right off the bat. That's like having a basketball team and two of the 5 players on the basketball team sitting on the bench, right? You got LeBron and Kobe sitting on the bench, and then you got 3 Eastern European guys that are left, right? I don't watch sports, okay? I just know basketball has 5 players. So you've got Dirk Nowitzki, you've got Shaquille O'Neal, and you've got Steph Curry. That is literally the extent of my basketball players. Okay, I don't know anybody else. But you got LeBron and Kobe sitting on the bench, right? This isn't the dream team anymore. Okay. When 2 of the 5 players, when 40% of the stock trade is moving against you, you shouldn't be trading long when the market's going short. But when it does reverse and you want to start buying stocks, that's what you want. That's what you want. Now you're starting to line people up. Next, the sector. If the sector is moving in your direction, the sector meaning if you bought something that's Apple's in the tech sector. If the sector in general is strong, that's what you want to see. You want to be pushing it up from all directions, not just the market pushing it up, but also the sector having the strength. And then lastly, the last 30% is the stock, meaning 70% of the move before you've even got into a single stock, 70% of it is due to outside forces on that stock. What do I mean by outside forces? The market pushing up is an outside force. The sector as a whole being strong is an outside force. Only once you boil it down to the one stock is it the last 30%. So if you're buying a stock like AMD, that is trending down, the sector was weak, the market was weak at this time, and you're buying the stock thinking that you're such a genius, you had 70% of the move working against you. And even the last 30%, if we're honest here, was working against you. So if you're buying a stock in a downtrend, hoping for the best, I got news for you. You are getting 100% of everything wrong. You're doing every single possible thing wrong. Because here's the deal. You may love the stock. You may think the CEO is such a genius. I don't know why you'd think the CEO is a genius when the stock looks like this. But let's say that you love the business model. You think the CEO is a genius. And you're like, oh, I'm going to buy it here because I know that price has to go up, right? I got news for you. Profits follow price. And if you're buying a stock that's going down in price, your profits will also be going down. Just facts. All right. So the first core tenet of the Outlier 9 is the market. Let the market tell you which direction it's going. How do we do that? We look at the SPY. The SPY is the S&P 500 ETF. We want to see the 10 over the 20, price over 50. This is the Outlier trend template, and it applies to every stock on every time frame, every day of the year, every minute of every day, because it's just math. The 10 period, it could be 10 1-minute candles, it could be 10 weekly candles, it could be 10 daily candles, it could be 10 monthly candles. It doesn't matter. The 10 period EMA greater than the 20 period EMA, meaning the 10 period is higher than the 20 period. In daily terms, let's go to here. This is AMD now that it's found a bottom, and the trend template is telling us which direction it's going. The 10 period is over the 20 period, right? The last 2 weeks, which is 10 days, is over the last 4 weeks, which is 20 days. And then price is over the 50 period, which is the last 10 weeks. Okay. So this is your short, your intermediate, and your long term. When you align your short, your intermediate, and your long term all together, that is the outlier trend template. It makes life so much simpler. Next, we go to the S&P 500. Let me just type in right here. And we look for the S&P 500 having a buy or sell signal. So inside of Outlier, we can see we got a buy signal on April 25th. And what's great about this too inside of Outlier, you can see if the trend template is lit up bullish or bearish or neither within one glance, right? The green overlay means you got a bullish trend. The red overlay means you have a bearish trend. A white overlay means it's in betwixt those 2 points. So we have a bullish trend, we have a buy signal. Next, the breadth of the market. So what this is showing is how many buy signals we have today versus how many sell signals we have today. So let's go take a look real quick. So today on the bull list, on the buy signals, we have 94 new buy signals today, like AKR, EGO, ENPH, EVRI. A lot of these, I don't know what they are, and that's okay. In fact, one of my mentors, Tom Basso, I had this conversation with him one day. I was like, Tom, I just bought this stock. I don't know anything about the stock. I don't know what they do, but I know the price is going up. And he's like, that's perfect. I do that all the time, Chris. One of the market wizards and I had this exact conversation. I do that all the time. I don't care what the company is. As long as the price is going up, as long as it's trending in my favor, that's all I'm looking for. And yet you want to sit there and pore over fundamentals. You want to sit there and pour through all these different cash flow statements, pour through all these different 10Ks, pour through all these different ratios, EPSs, and whatever else. None of that matters. Fundamentals are useless. Fundamentals come out 4 times a year. So the other 99% of the time, nothing matters. You're telling me that once a quarter, every 90 days, it's the only thing that matters. But the other 89 days in between have nothing. I'm going to tell you the opposite. I'm going to tell you the 89 days in between those 2 points are what matters, because you're only going to get paid if price is going up. And those 4 days a year, I actually avoid. I'll get out of the way. David says, I'll never trade fundamentals again. I can't count the number of times my bull thesis on the company came true just for the stock to do the opposite. Thanks, David. I really appreciate you sharing that. So 94 signals with buy signals today, 105 sell signals today. And so if we look at market breadth, excuse me, if we look at market breadth, this is what I see. If I use the 10 period EMA, which is my signal, we do still have a bullish trend. You can see the green line slightly over the red line at the current point right here. I'm going to move my cursor out of the way so you can see it. The green line is still slightly over the red line. So this is still a bullish trend on breadth. How many buy signals we have versus sell signals. A couple of weeks ago, that peaked at 80%. 80% of all the stocks we covered had a buy signal. And I said, when it starts to come down, I'm not interested. But it came down, actually crossed under the 10 EMA and crossed right back up. And I appreciate Albertone in our Discord pointed that out. I didn't even see it that day when it popped back up. He was 100% right. And I owe him big. I owe him big because I'm making big money today thanks to him. And I really appreciate you, Albertone. So right now, the breadth is still bullish on the market. Now, one thing I want you to point out over here, or I want to point out to you over here, is when I change this from the 5 EMA to the 10 EMA, right? It's exactly like doing this and this. One of my rules is if it goes over 75% and then contracts, then I no longer put on new trades in that sector. So let's look at financials for a second. We can see the financial chart on breadth going up, little spark chart right here. It's at 83.92 today, but that's 75 basis points less than it was on breadth, meaning it crossed over 75, continued higher. I got out when it came back down. I'll show you what I mean in just a moment. Friday, we saw this reversal here on the breadth on the market. So I went to make new trades. And now Monday, we can see the financial breadth is starting to contract again. So we go over here, and I love this right here because this makes my life so much easier when I'm looking at it. We can see right here, yeah, we do have a contraction on the financials breadth. So one of the trades that I put on was Robinhood, which is up nearly 8% this morning. Robinhood is up nearly 8% this morning. A tremendous trade, hugely trade. I love it kind of trade. And I won't be adding any new financials until this market cycle resolves itself again. Okay, this is a decently complex theory that I'm trying to teach you here. Is that when the market cycle repeats, when it reverses, that's when I'm interested in putting on new trades. But when it's over 75 and contracts, I'm not interested. It's not over 75 right now. The actual value is at 68.74 on all the stocks we cover. But on the financials, it's at 83. So let me show you what I mean by the market cycle right here. Right, this is our market breadth. This is the market cycle. And this is the emotions and what it looks like for all the people involved in the market cycle. Right, when it gets to euphoria, people are screaming buy, buy, buy. That's where we're at right now. That's where we're at right now. People are screaming buy, 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 buy. We had a little contraction. Right, we got down here maybe to complacency. So I got a little bit of exposure to the market. I was about 37% invested on Friday. And I'm going to make sure that I get out of the way before we start having people screaming sell and complacency turns into anxiety, denial, and panic. So that is what you need to consider, right? We want to be fearful when others are greedy, right? When people are freaking out, losing their minds, that's when we start seeing a lot more sell signals. That's when we get out of the way. When people are freaking out, losing their minds, and they're so scared to death, that's when we get more and more buy signals. That doesn't mean that when something's screaming down, like AMD, to be buying it. You wait until a curve like this happens. Your trend template starts reversing. That is the time to start looking to be aggressive, not as it's screaming down. Buy stocks while they're crashing up, not buy stocks while they're crashing down. So let's go to the next step of the Outlier 9. I'm trying to go through this so you guys can learn how to analyze the stock, right? Don't just buy a stock because it's there. Buy a stock because you can see why it's working, right? The breadth increasing. The signal is a buy. The trend is going up. Let's go to the sectors here. Fear and greed for the sector. Now, this is data that you can only get in Outlier. So let's go to Hood right now. Manny's saying, are you going to sell Hood today? That's a great question. Let's see, Manny. We will evaluate Hood specifically right now, and I'll go through it with you. So looking at Hood, right? First thing we see is the sector down here getting less fearful, more greedy. But the market breadth chart we talked about a minute ago, we can see it's peaking and coming down on this light green line right here. That is the exact same chart as this in the financials in the breadth. We make it easy. We put the financials in one place so you can see that as well. Okay. This chart is this chart. Now, this red and green background right here is this red and green line right here. Right. So we're combining these two to make this chart. But what it's showing you is how many stocks have the green overlays or the red overlays in that sector, right? So right now, most of the stocks in the financial sector, in fact, it'll even tell you the numbers down here, 283 stocks in the financial sector are in a bullish uptrend. That's what you want for sure. There are 41 stocks in a bearish trend right now. That's what the green and red represents down here. So that's really cool, right? Really cool. So it can still be in a bullish trend and get a sell signal. And that's what we might be seeing here, right? So here's a perfect example. Sell signal inside of this bullish trend right here. Now, this is the buy signal that I took on Friday. It actually came on Thursday, but I took it on Friday. So fantastic trade so far on this one. So next, fear and greed for the sector. That's this right here going up higher. Breadth for the sector. This one has peaked and is coming down. So for me, when I see the market breadth peak and then come back down, I don't add any new trades, but I don't take off trades until the market and the sector both go down. Meaning, if it's over 75, I'm okay with adding as it's going up. Once it peaks, do not add any new trades until that market cycle reverses. That's on the sector. If the market, where is this? Hang on. If the market and sector breadth turn negative, that's when I close a trade. So right now, the market breadth is still positive for me. The sector breadth has turned negative for me. Now, it's still high. It's still super high, right? But for me, because it's peaked and started to contract, that's where I'm getting out of the way. So, Manny, to your question, I'm still holding hood right now because I don't see a reason to get out. In fact, let's go through my exit points. The 10 EMA is my trailing stop. So let's look at hood before the market opens. It opens about 15 minutes, but we'll take a look at it right now. At the 10 EMA is down, zooming in, hang on. The 10 EMA was down here at 50.24. I don't know where it's going to be this morning, but it's not going to close underneath that. Pre-market has it up here at 59-ish. The half ATR from entry is my stop loss. So at half an ATR value below is my stop loss. I'm not worried about that. Will it run into any outlier blocks? There's no outlier blocks on top of this. The outlier heat map. When it says heat map stalls, that means how greedy is it? How fearful is it? And is it still getting more greedy and less fearful? Or is it stopped getting more greedy and started to get more fearful? Yesterday, the heat map value, you can see if you look right here, the heat map value yesterday was at 59. Today, the heat map value is at 64. So it's getting more greedy. That's what we want to see. And then we haven't rolled it yet, so we're not worried about that rule. But the other thing to keep in mind is on that heat map value, I want it to continue growing, but I don't want it to get so far where what we've seen are snapbacks. Here's a couple really good examples, right? Robinhood got super fearful down here around 10, 12-ish, snap right back up. Robinhood got super fearful here around 13, snap back up. Okay, perfect examples of what I don't want to happen to me in my trades. So right now it's at 64. I like to do, when it's between 55 or 50 and 75, a 10-point spread. So I got in on Friday when it was at 59. So I'll look to exit on whenever it comes at 69. Nice, right? 69. That's nice. So that's why I say selling this strength at 69. Nice. Now, here's the thing. Am I going to stress? No. Am I going to worry? No. Am I going to doubt myself? No. All I have to do, and this is what I try and teach you every day, all I have to do is follow my plan. I can drive from Dallas to Disney World, and all I have to do is follow the map. But here's the thing, is that there's about 400 exits between Dallas and Disney World that I could take any time. But if I actually want to get to Disney World, I have to follow the plan to get there. I have to follow the map all the way. Sure, every once in a while, might have to pull over, charge my Tesla, might have to pull over and get some Starbucks, might have to pull over and use the restroom. But I'm going to get from Dallas to Disney World, no matter what, because I follow my plan. And the same thing you need to think about whenever you are putting on your trades. If I'm going to go from where I enter to where I exit, anything could happen. I could, not me, but let's say that I'm speaking for you. I could get super scared. I could get super scared that all my profits will disappear and I'll just like close it randomly. I could get super scared that Donald Trump is going to tweet something from his golden toilet. I could get super scared that CPI comes out tomorrow. Now, the question to you is, do you have that built into your trading plan? If not, build it into your trading plan, right? Build those things into your trading plan. And of course, you can make it anything you want because it's your plan. You have unlimited opportunities in the market to come up with whatever you are going to do. But I'm telling you one thing right now, make the plan, write it down, whether it's on, some sticky pads, whether it's on a PowerPoint presentation, right? Whether it's on the side of your bullhorn, right? Doesn't matter. Write it down. But here's the hard part. You have to hold yourself to it. You have to hold yourself to it. Now, this is a trading psychology lesson, and most people don't care about trading psychology, but trading is 90% mental. 90% of trading is what goes on in between your ears. You figure out how to do this, you will be successful. I can't guarantee you'll be profitable, but you'll be successful in following your plan, getting from Dallas to Disney World. So here's what I want to do next is Mikey Mike's asking, what and how is a roll-up done? Fantastic question, because in this case, I would be looking to roll up the hood, because it went up 1 ATR for my entry point. Now, I saw somebody ask the question, what is an ATR? ATR is this value down here. This is your average true range. This is measuring the volatility of the stock. So if I zoom out a little bit, we can see the volatility of the Robinhood was around $1 in October 2024. Then the volatility went up to around 260 in February of this year. And then it peaked a couple weeks ago in April at around 467, meaning that the average move, the volatility of Robinhood went up about 3 times higher, maybe even 4 times higher than it was just a few months ago. Meaning that if you put on a trade, you have 4 times as much market risk than you did a few months ago. Whoa, hey, hang on a second. I don't want market risk. I just want to make money. Here's the deal. You need to anticipate risk first and then work backward. Okay. How much risk are you willing to take in this trade? Well, not 4 times what you were taking a few months ago, right? If you were putting on 100 shares a few months ago, putting on the same 100 shares today would result in 4 times more volatility, which if you understand how markets work and you want to move with that volatility, that's great. But let's say you put it the same size on and volatility is expanded 4 times and it's working against you. That super sucks, right? So we want a position size based on how much volatility is in the market. So that's the one reason why I'm using ATR is position sizing, but also to tell me where things are working or where things aren't working, right? Because let's say if I put an arbitrary $1 stop loss on Robinhood, just arbitrary, I got in, I'm gonna give it a $1 stop loss. That could be great, or it could be completely useless. Completely useless, meaning like it just goes through that all the time. Or it's so far away that it's never going to touch it. So what I do is I do a half of an ATR. Now I got this from The Complete Turtle Trader, that book by Michael Covell, and it helps you position size correctly as well as stop loss size correctly. Because if it goes down half of an ATR, you're wrong, and that's okay. Be okay with being wrong. Do not be okay with staying wrong. But when it goes up 1 ATR, which it looks like as of right now in the pre-market, it should get to that point. That's where I roll the option. Now, what is rolling the option? Let me show you what this is. So let's go long call options. Let me show you what an option looks like here. So this is a long call, right? This is what I bought. I don't want to search with Google Lens. There we go. This is what I bought right here. Okay. So if I bought a long call, it's already profitable. I can only lose so much, but I could make an infinite number. Okay. Now my strike price in this case, when I bought Robinhood, let me go check what strike I bought. I bought the $48 strikes. So if we go to Hood and we go to May 30th, 48 strikes. Yes. We go to the 48 strikes here. I paid $7.50 for this. I don't know what it's going to be at once the market opens, but it's going to be a lot more than $7.50. Now, by rolling my option, here's the cool thing. Let's say that it opens up this morning and it's $12, or maybe by the end of the day, because that's when I trade. Let's say at the end of the day, this is worth $12. It went from 12 minus 750. It's up $4.5, which is divided by 750, which is a 60% gain. So let's say that it goes up to $12 and I have a 60% gain. Freaking sweet, right? Let's go. But now it's like, well, what do I do with that 60% gain? Do I just let it ride? Can I take some of it off? Here's what I do. I do what's called rolling up the calls. So if I own the 48s, I would look for another call closer to the money that's still liquid. So maybe the 50s. I mean, all of these are liquid. Maybe even the 51s, maybe the 52s. And then I close the trade that I'm already in. So let me write it on here so it makes sense. This is the 48s that I'm in, 48 strike price. It's already moving up. I then close this one and open up a new one. And let's say that I go for the 50 strike. And it looks like this. Now, when I do this, let's say that and this is going to be difficult till the market opens, but let's say I sell to close the 48 and I buy to open the 50s. In this case, and it's going to be a lot more than this right now, I take in $1.53 of credit, meaning when I bought it for $7.50, so 7.5, now if I take in $1.50, that means my risk in the trade is only $6. My risk in the trade is only $6. And you're probably thinking, okay, so what? Who cares? I now have that $1.50 to go trade with. I have less risk in the trade, and I have partial profits off the table. They are in my bank account and nobody can touch them. And I have more capital that I can go trade with. So now we're seeing why we roll options, right? Because when the stock moves one ATR in your direction, can you roll up for a credit? Sometimes rolling out is needed if it's getting close to expiration. Roll up for a credit. If you're doing it for a debit, you're doing it wrong. If you're doing it for a debit, you're actually adding risk to the trade. You don't want to do that. So as one order, you would close the original and then buy to open. So it would look just like this. So it's just moving from A to B. It's just moving up the option strikes here. That's it. Moving from one to the other. The same number of contracts. And it takes partial profits now. It frees up capital now that you can trade with. And it keeps the trade alive. Isn't that cool? Now, I tell people it's like voodoo. It's like Baby Yoda doing some force on your trade, right? He's moving it up with the force. Use the force, Baby Yoda. This is how it's done. Pretty cool. And it keeps your trade on until you get your exit signal, and then you take it off. And I'm going to start to answer just questions in just a moment, but I want to show you this slide before I do. When you put on a trade, these are the three things that you need to know. Number one, you should not ever have an expectation for the outcome of the trade. When I say that, I mean, you can't put on a trade and say, I expect to be able to buy a Lambo with my profits by the end of the day, by the end of the week. I will not exit this trade until I have enough to buy a Lambo. Lambos are food stamps. That's it. I got nothing in between there. No way. Do not set expectations on the outcome of the trade. Do not set a profit target, because when you profit target, when you set an anchor and it never reaches that anchor, you can hold on to a loser for weeks and months and potentially years because you've decided, let's use AMD as an example, because you decided when you bought it on January 6th that your price target, which means nothing to the market, was $150. The market gives no monkey donkeys whatsoever what your profit target is. So you say, well, I'm only going to get out if it does this. So you've price anchored to 150. And what's happened since then? Down and down and down and down and down. And it got into the 70s at one point, into the $70 at one point, which means from this point up to 150, it has to double. Do you realize that? To get from this point to this point, the stock price has to double. So setting a profit target is a very juvenile, inexperienced, amateur way to trade because you don't have any clue if it will ever hit that. AMD may never hit that for the rest of time, ever again. Very possible. But also it's possible that it does. Are you willing to wait 6 months, 2 years, 18 years? Who knows? To find out? Not me. Not at all. Having a profit target anchors you to a point that you don't ever need to go to. So lastly, this is where you need to be. You need to get to the point we talked about earlier about blocking out everybody else, blocking out anybody who has anything to say about your trades, and focusing in on your plan, saying, I will have a plan to get out when one of my exit signals is hit, and I will not touch it otherwise. And if you're up 367%, and you're looking at this trade and you're like, oh my gosh, it's so much money, I should take it off the table right now, but it still hasn't hit your exit point, relax, take a breath, go for a walk, go touch some grass, okay? Because that can happen. And that's so much harder to me to let those profits run than it is to cut a loser. And you may be the same too. Maybe you've never had a giant winner before because you've never had the chance to have a giant winner because you've never let it run. Keep your losses small and let your winners run out of control, but know exactly where you're going to get out if it's a winner or a loser. That was a really good lesson today. That was a really good lesson today. I got a couple minutes. Let me answer some of your questions. You guys are blowing it up. We have 550 people watching live right now, which is bonkers to me. I used to do this before January 6th and get 20. I've made 2,000 videos on YouTube, and I used to get 20 people to watch them. How things have changed, thanks to clickbait. That's how I got you here. AMD's existence makes your life so much easier. It does, because it gives me an easy representation of a stock that YouTubers would go out and flaunt and say how smart they are for buying AMD, when it's just the easiest one that's going out to pick on. So let me do this. I'm going to run through the chat, look for any questions, and try and help you out as best I can. Check out the graph for the Dunning-Kruger effect. Yes, we talked about this the other day. Dunning-Kruger effect. This is a brilliant thing here. No, that doesn't have. Here we go. The peak of Mount Stupid. I think a lot of YouTubers head right up to the peak of Mount Stupid. They have put on a couple trades that have won, and they're like, oh my gosh, this is how it's done? I didn't know it was this easy. I didn't know the peak of Mount Stupid was this easy. And then they lose money for years. They lose money day after day, week after week, because they fall into the valley of despair. I know the pixelation didn't come through great on this, but they fall into the valley of despair where they're like, oh my gosh, I bought AMD because I thought it was such a genius. Now I'm in the valley of despair because all of my stocks are going against me and I don't know what I'm doing wrong. What you were doing wrong was you didn't have the Outlier 9 all lined up for you, right? You have the Outlier 9 and it just makes life so much easier. Then they finally figure it out. They finally start making some money and they go up the slope of enlightenment. And they're like, oh, okay. That's how it's done. Trust me, I've been here. I think my biggest slope of enlightenment moment, there were 3 of them. I'll go through all 3. First one was when I was working with Steve Burns, author of New Trader, Rich Trader, lots of books. Steve is the very most important person in my entire life. I don't think Steve really realizes how much I talk great about him. But he said, Chris, I used to trade that way too until I realized I wanted to make money. And that was such a slap in the face because it's like I was telling him how smart I was. And here's somebody who's made millions of dollars in the market. And I'm telling him how smart I am. Yeah. Then Minervini, he said 2 things to me. He said, Mark Minervini is one of the greatest traders of all time. Super sweetheart. But he knows his shit. And he will be the first to tell you that he knows it. And I remember one time he said, you need to shut up and listen. Don't tell me what you're doing. If you want to make money in the market, you need to stop talking and listen to somebody who's figured it out before. I was like, oof, okay, all right, relax. Okay, you're right, boss, I got you. And then another time we were talking, he goes, Chris, this is why your trades suck. This is why your trades suck. So the slope of enlightenment, there's some times that you have some uncomfortable conversations with yourself or with your mentors to tell you you don't know what you're doing. And then finally, that got me to the plateau of sustainability. You know what? Outlier University starts tomorrow. You're not even in the alpha class, but that's okay because everybody basically is in the alpha class. I'm so stoked about this, right? Let me see. Here we go. Would you buy the tech or energy stocks if there were any to buy signals from today or Friday? Yes, I would. It's a great question because looking at my looking at my plan earlier this morning, I actually am looking at a handful of stocks. I'll show you which ones I'm looking at. We'll see this afternoon if we put them on. First Solar came through as a buy signal for me. Palantir, if you can believe it, came through as a buy signal for me. And then this is Zoom Communications came through as a buy signal for me. However, it's inside this order block. So there's a chance I could put on First Solar and Palantir today. There's a chance. I'm not saying I am going to do it, but there's a chance for those. Let's see. Aussie Ian, same expiration date. It can be. But if you're running out of time and you need to roll out, you can do that too. Just make sure you do it for a credit. James says, what would be the equivalent of rolling up when it's just a stock? There isn't an equivalent to rolling up when it's just a stock. When you have a stock, you either can be in, or you can be out, or you can add or subtract shares, and that's it. There is no equivalent. And that's why it's so cool when you own stock. When you own options, you can roll it from one strike to the other. When you own stock, you're either in, sell some, buy some, or you're out. So fantastic question. You can't do that. Muck through the mark. Can you roll options on a tier 1 option level? That is a question for your broker. I don't know. Lots of brokers have different levels of options trading abilities. I always tell people, just like, go for the max. If you can convince them that you can do the max, don't even ask. Just say, I know what I'm doing. Give me all your options. Because I'm all about more freedoms and less taxes. And that's why I live in Texas. You want to have all the freedoms you can inside your broker account so you don't get limited by that. Because, bro, that sucks. Ultra sucks. Let's see. Justin says, just got here, had to rewind, but I have a plan. Make money, money, money. Okay. That is a great plan. How you going to do that? All right. My plan has, how many slides does my plan have? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. I have 15 slides for my plan. Surely your plan is not, I just want to make money, money, money. Okay. If I, as a pro trader, have 15 slides to make sure I know exactly what to do for every circumstance, you probably need more than just, I need money, money, money. Give me money, money, money. That is actually the fastest way to lose money. Sounds crazy. Sounds crazy. James says, thanks, Chris. Shame it's so hard to trade options in the UK. They judge experience. We'll have to see if they let me in a few years or something. Dude, I don't know. Maybe change brokers and just don't mention anything to them. I mean, I'm not giving you financial advice, but if they let you do that, right? If you change from broker A to broker B and you just say, I have lots of experience, and they're like, okay, cool. When I've traded or changed brokers, that's all I do. I just click this checkbox instead of that checkbox, and now I have more options. Makes it easy, right? Nicholas says, Chris, do you do spreads? I used to, and that's how I blew up my account. I used to do all the iron condors, all the put spreads, the call spreads. I remember I would spend hours and hours and hours digging through the options chain, doing all kinds of different combination of calls and puts, trying to figure out how least risk of a trade I could put on. Dude, I did all of that. I remember even dreaming about iron condors. That was when I was like, okay, I've gotten real deep here, when I was dreaming about iron condor trades. But no, at this point, not at all. I just do long calls, long puts, but deep in the money long calls around 80 delta, deep in the money long puts around 80 delta. That is a leveraged investment versus a gamble. And Chris don't gamble. Chris makes leveraged investments. Let's see. Oh, so Rick helps out. I managed to get options in UK with IBKR. Had to jump through some hoops. Worth it, but it takes a while, maybe a week. There you go. Hey, listen, don't forget to come this afternoon where I'm going to help you save time, make money, and start winning with less risk. Be sure you click one of these videos. We'll talk soon.